Now that you understand what money is and how it actually moves, the next question is obvious. Who controls the rails? Because whoever controls the rails doesn't just move money, they decide how money is allowed to move. At the core of the global financial system are a few key players. First, commercial banks. They hold deposits, issue credit, and act as gatekeepers for most transactions. Second, central banks. In the United States, that's the Federal Reserve. They don't move your money day to day, but they control liquidity, interest rates, and access to settlement systems. Third, clearing and settlement networks. Systems like ACH, Fedwire, and international messaging networks that connect banks to each other. These systems were built decades ago for a world that moved slower, trusted fewer participants, and relied heavily on intermediaries. That's why access is restricted. That's why onboarding is difficult. That's why compliance is so heavy. Governments care about these rails because financial rails equal economic stability, national security, and political power. If you control settlement, you can freeze assets, monitor flows, or cut off access entirely. That's not a conspiracy, that's infrastructure reality. Now, here's where things get interesting. Digital settlement rails don't require the same centralized intermediaries. They can operate continuously, they can be transparent, they can reduce friction, but that also means they challenge who controls access. That's why governments don't fight digital assets outright. They regulate them, they shape them, they decide which ones integrate and which ones don't. This is why policy matters. Not because of politics, but because policy determines who gets plugged into the system. In the next video, we'll talk about where the old system breaks and why change is no longer optional.